Let's be honest about where you are right now. You are not a novice. You've moved past the beginner's graveyard. You can read a candlestick chart. You know what an exponential moving average is. You understand the theory of risk management. You've spent hundreds of hours staring at screens, absorbing technical analysis like a sponge. You have a system, or at least a working hypothesis of one. Yet you are stuck. You are not consistently profitable. You are trapped in the most frustrating place in this entire profession, the invisible plateau. This is the hidden stage of trading, where knowledge meets incompetence in execution, and you cycle between feeling like a genius and feeling like an absolute fraud. 1 month, you feel the momentum. You follow your rules, the trades hit, and you see the profit and loss statement rise. Hope surges. You think, I finally cracked it. Then the very next month, the wheels come off. You chase trades, you revenge trade, you skip your stop losses, and the profit factor drops to 0. Everything you built is wiped out by a single week of emotional decisions. This cycle of hope followed by despair is exhausting, and it feeds the core lie you whisper to yourself every night. If I just find the right indicator, the right signal, the perfect time of day, I will break through. That is the lie of the intermediate trader. Stop running. Understand this clearly. Your strategy is likely fine. It has a positive expected value on paper. The market is not testing your technical analysis. It is testing your character. It is testing your discipline, your patience, and your capacity to sit still when nothing is happening. You have learned how to trade, but you have failed to learn how to be a trader. The difference is surrender. The difference is the ruthless self-awareness required to see that the enemy is not the volatility, the news headline, or the broker. The enemy is the impatient, emotional voice inside your own head. The charts are just a mirror. You are not failing because of the charts. You are failing because of the time between the charts, the waiting, the hesitation, the overconfidence that creeps in after a win. The market is designed to reward the disciplined and violently punish the impatient. You have the knowledge to succeed, but you lack the psychological structure to sustain it. You are trading with the handbrake on, constantly sabotaging your own profitable setups. And why? Because you are terrified. We often assume the fear that keeps us stuck is the fear of losing money. That is too simple. The real fear, the one single fear that guarantees you remain trapped on this invisible plateau, has nothing to do with your account balance. It is a primal fear rooted in your identity. We are going to expose that fear because until you name it, you cannot defeat it. The fear that keeps you stuck is not the fear of losing money. It is the fear of being seen as incompetent, the fear of having your own identity as a smart person invalidated. You have absorbed hundreds of hours of content. You read every book about chart patterns, market cycles, and advanced option strategies. You know the exact definition of every technical indicator. You have the knowledge of a professional analyst, yet you trade like a beginner. This is the curse of knowing too much. Your intellect became a weapon against your own success. The intermediate stage is defined by this obsession with complexity. You run 6 conflicting confirmation indicators on your screen. You follow 5 different experts, each with a diametrically opposed strategy. When the market moves against you, you frantically switch systems, trying to synthesize a perfect signal from the noise you deliberately created. Why? Because if your system is simple, if you use one moving average and basic price action, and you still fail, the fault lies squarely with the operator. With complexity, you gain an alibi. You can whisper to yourself, the profit factor calculation was simply not robust enough for this volatility environment, instead of admitting, I let greed override my stop loss. Complexity is not a strategy. It is a sophisticated defense mechanism designed to protect your ego from accountability. The market does not care about your alibi. The market demands simplicity, but your ego demands complexity. Your ego hates the idea that success requires nothing more than the disciplined execution of a kindergarten-level plan. It is a paradox. The more information you consume, the less effective your trading becomes. You confuse knowledge, the theoretical understanding of every possible scenario, with wisdom, the discipline to execute absolutely nothing when your simple, specific setup is absent. Think of a skilled musician. They know every single note on the score. They understand the theory of harmony and counterpoint. But if they haven't internalized the rhythm of patience, the rhythm of disciplined inaction, they cannot play the piece. They just generate noise. Trading is the same. You know every note, yet you cannot hold the silence. The greatest trades you will ever make are the ones you choose not to take. We confuse activity with achievement. We feel productive when we are analyzing, clicking, and adjusting. The truth is, the market only requires 3 things from you, and none of them involve predicting the future. 1. A clear entry parameter. 2. An immediate, non-negotiable risk management rule. And 3. The patience to wait for that entry parameter to manifest. That is it. Everything else is distraction. Look at your charts right now. The charts are quiet. They are simply presenting data. Why are you so loud? Your internal noise is destroying your edge. It is preventing you from seeing the obvious, simple patterns that actually generate wealth. You are waiting for the market to give you permission to succeed. But the market is silent. The market is waiting for you to surrender the need to be complicated. It is waiting for you to surrender the need to be right. But what happens when you finally stop looking outward for the solution and start looking inward? What happens when you realize the person you are truly fighting is not the market, but the version of yourself that is terrified of silence? That terror manifests as the never-ending search. The search for the 90% win rate strategy. The perfect indicator combination. The secret entry point that only 3 people on Earth know about. This is the great illusion that keeps intermediate traders trapped. You are convinced that the reason you are stuck is external. A missing variable in your algorithm, a secret setting on your chart. But this frantic search, this obsession with optimization, is not diligence. It is procrastination. It is the most sophisticated way you have invented to delay the inevitable moment you have to look inward. If you are always testing, always backtesting, always tweaking, you never have to face the cold, hard reality of executing a flawed human system. Let me be clear. The holy grail of trading does not exist. The edge you seek is not hidden in a mathematical formula. It is not a secret entry signal. The edge is simply the statistical probability inherent in your methodology, magnified by the ruthless mechanical management of your emotional state after the entry. You treat your strategy like a perfect machine, with clear rules for risk management and position sizing. You have precise rules for your take profit and your stop loss. But when the market opens, you operate that machine like a frightened child, driven by impulse, ego, and the crushing weight of fear of missing out. This is the disconnect. This is the cost of discretionary deviation. The journey from intermediate struggle to mechanical consistency is not instantaneous. It is achieved through relentless philosophical refinement. To maintain this detachment, to ensure your focus remains fixed on process over outcome, requires a constant source of intellectual gravity. We recommend securing the Rowan Ashworth 2025 edition of Marcus Aurelius's Meditations. This text is not merely a book. It is a professional instrument for maintaining psychological equilibrium in the face of financial randomness. For those ready to incorporate this essential wisdom into their trading architecture, a link to acquire this volume is secured below. One emotional decision, one deviation from your established rules, chasing a move, widening a stop loss, or doubling down out of spite, can wipe out weeks of mechanical, tedious discipline. You are obsessed with the win rate, aren't you? You want that 80% or 90% number because it validates your ego and assures you that you are right. But the market does not care how often you are right. It cares about how much you make when you are right versus how little you lose when you are wrong. This is the core of the problem. You must shift your focus entirely from the win rate, which is an ego metric, to the profit factor. The profit factor is the only metric that matters, demanding that you learn to not just tolerate, but truly love small mechanical losses. These small losses are the cost of doing business. They are the premium you pay for the opportunity to capture an outsized gain later. When you deviate, you are refusing to pay that small premium, and the market demands a catastrophic payment later in return. Stop looking for certainty. Stop demanding a system that predicts the next candle with absolute precision. Certainty does not exist here. The only certainty in trading is uncertainty itself. The problem is not that your system has flaws. Every system has flaws. The problem is that you refuse to accept the reality of its inherent, unavoidable randomness. You are fighting the very nature of probability. You are trying to force a non-deterministic outcome into a deterministic box. And until you make peace with the fact that your carefully constructed edge will fail 50% or even 60% of the time, provided the losses are small, you will remain stuck. The market is waiting for you to stop fighting the coin flip. It is waiting for you to realize that true control is found only in the surrender of expectation. But what does that surrender actually look like in practice? How do you accept randomness without becoming reckless? It starts with the one thing every struggling trader avoids: the brutal, honest review of their own profit and loss journal. But most traders don't look at the journal to learn. They look at it to confirm their biases. They are searching for the one trade that proves they could have been right, if only the market hadn't been so unfair. This is the ego's last stand. The need to be right is, without question, the most expensive indicator you will ever place on your charts. It is a psychological drag that costs more than slippage, more than commission, and infinitely more than the simple, acceptable loss. Think about this deeply. Why does a small loss feel like a physical punch? Because the market isn't just taking capital. It is challenging your perception of yourself as a competent decision-maker. Losing money is often easier for the ego to bear than admitting an error. Money is replaceable. You know you can earn it back. But the ego's dignity, that feels finite. That feels like a permanent stain on your analytical ability. This is why you will tolerate a $5,000 loss that happened because you moved your stop loss. But you cannot tolerate a $500 loss that happened because you followed your own rules and were simply wrong. And this psychological wound is the birthplace of the revenge trade. We call it recovering capital, but that is a lie. The revenge trade is never about recovering capital. It is a desperate, frantic attempt to recover dignity. It is the ego screaming, "You will not tell me I was wrong." You are not trading the chart anymore. You are fighting a mirror. You are trying to prove the market wrong, which is like trying to prove gravity wrong by jumping off a roof. The market doesn't care about your conviction. It only cares about price action. Every trader has a number that defines the unacceptable loss. It is not necessarily based on percentage risk. It is based on emotional tolerance. The unacceptable loss is the one that forces you to confront your flawed initial prediction. This is why you move your stop loss. You aren't moving it to save the trade. You are moving it to save your prediction. You are trying to keep the possibility of being right alive for just one more minute, one more hour. You hold on to a trade that is clearly failing, not because the setup is still valid, but because your subjective belief that it should work is now entangled with your self-worth. Your belief is irrelevant noise. The market cannot hear your internal monologue. It cannot care about your reputation. It only responds to supply and demand. This is the brutal truth of the hidden stage. You are clinging to an identity that is mathematically incompatible with profitability. What are you clinging to? What identity are you trying to protect by forcing this trade, by moving that protective order? The paradox of mastery is this. The moment you truly stop caring whether you are right or wrong, the moment you become completely indifferent to the outcome of any single trade, that is the very moment you become consistently profitable. That is the surrender. The market keeps showing you the same painful lessons, hitting the same emotional trigger points because you refuse to pay the emotional tuition required to learn them. You keep trying to pay with capital instead, believing that money can somehow buy back your dignity. The cost of being right will always be higher than the cost of admitting an error. To achieve true objectivity, you must separate the decision from the outcome. You must define, before you even enter, the exact point where the trade is objectively invalid, regardless of how you feel about it, regardless of what your ego insists. This brings us to the most fundamental shift required to exit the hidden stage. The ruthless quantification of risk, not just in dollars, but in absolute structural terms. Structural terms. And that brings us to the core truth that most intermediate traders refuse to accept. The truth that keeps you trapped in the hidden stage. The market is not a creature to be tamed, nor is it a benevolent partner. The market is a mirror, perfectly objective, perfectly neutral. It doesn't hold grudges, it doesn't offer favors, and it certainly does not care how much money you need to pay your rent this month. It is merely a mechanism of price discovery, reflecting the collective action of millions of participants. But when you step in front of that mirror, what does it show you? The market does not know your account size. It does not know the hours you spent back-testing that strategy. It is indifferent to your expectations of a massive financial return. It is waiting. It is perfectly still until you introduce the variable. Your profit and loss statement is not a measure of the market's cooperation. It is a direct, quantifiable measure of your internal discipline. Think about that for a moment. Every red day, every catastrophic drawdown, is a perfect, objective reflection of a moment where your strategy broke down, where your process failed, or where your ego demanded an outcome that the structure of the trade could not support. The market is waiting for you to stop projecting your personal needs onto its indifferent movements. If you approach the market with fear, desperate not to lose the money you have, the market will reflect opportunities that look too good to be true, only to snatch them away the moment you commit. Fear begets hesitation, and hesitation guarantees entry at a suboptimal price. If you approach it with greed, demanding exponential returns from a slow setup, the market will feed you slippage and false breakouts, punishing your impatience swiftly. When you are desperate, the market gives you choppy, sideways action, grinding your capital down until you finally explode in frustration and take a high-risk revenge trade. It is a perfect feedback loop. The market is not the problem. It is the messenger. It is simply showing you who you are in that moment. You are fighting the reflection. The market is waiting for you to become boring. When your trading is emotionally boring, your execution becomes repetitive, predictable, and devoid of internal drama. Your results, paradoxically, become extraordinary. Trading mastery is found in the absence of feeling. It is the moment execution becomes effortless, decoupled entirely from the outcome. This is the flow state. This is when the system takes over and your personality steps out of the way. You are no longer managing fear or chasing opportunity. You are simply managing risk parameters and executing objective rules. You are no longer trading the market. You are trading your plan. The market, in turn, rewards the consistency it sees reflected in your execution. But what do most traders do? They stare into the mirror, see their own desperation staring back, and blame the mirror for the ugly image. You believe the market must change for you to succeed. You believe the volatility must calm down, the trend must become clearer, or the news event must stop surprising you. You are constantly trying to adjust the external world to fit your internal chaotic state. And the market, that silent, stoic entity, simply waits. It is whispering the truth that will set you free. Change yourself, and the reflection changes instantly. The external chaos you perceive is nothing more than your internal chaos projected onto the charts. The only path forward is to accept that your profit and loss is not a scorecard of market difficulty. It is a direct, honest report card on your self-control. This acceptance is the prerequisite for consistency, and it forces us to confront the deepest source of leakage in your account, the insidious nature of the unplanned trade. The insidious nature of the unplanned trade. To conquer this internal chaos, you must embrace the concept of necessary surrender. The word surrender feels weak, doesn't it? It sounds like quitting, like admitting defeat. This is the first psychological hurdle you must clear. Surrender in trading is, paradoxically, the most powerful act of control you can execute. It is not giving up on trading. It is giving up the illusion of control over the market's outcome. You cannot control if the next 15 minutes will see a rally or a reversal. Yet every time you widen a stop loss or enter a trade based on a gut feeling or hope for a turnaround, you are acting from the delusion that you can force the market to bend to your will. This belief is the single source of all your emotional suffering and your account leakage. Your job is not to predict the market. Your job is to manage your inputs. This is radical acceptance. You must accept that while your tested edge is mathematically sound over a series of 100 trades, any single trade is essentially a random distribution event. It is a flip of a coin. The single trade is meaningless. It holds no emotional value, no predictive power, and deserves no review until it is part of a statistically significant series. Why do you spend hours agonizing over a single 20-minute trade? Because you are treating the market like a casino, hoping for that one big score, letting the short-term outcome define your self-worth. Stop treating the market like a person who owes you something. To achieve this profound detachment, you must cultivate the persona of the mechanical trader. You must become two distinct people. There is the emotional self, the observer, who watches the charts, feels the fear, and registers the desire for profit. And then there is the execution self, the machine. The machine is the only one allowed to touch the mouse. The machine has no feelings, only instructions. It knows the exact risk per trade before the entry. It knows the precise location of the stop loss and the predetermined take profit. The machine executes the plan flawlessly, without hesitation and without hope. When you enter the trade, the machine is done. The trade is over. This is the moment of true surrender. You execute the plan, you set the parameters, and then you must physically walk away from the screen for a defined period. If you are still staring at the profit and loss number, manipulating your stop loss, or hoping it turns around, you have failed the test of surrender. You are still clinging to the illusion of control. You are trading from a place of scarcity. You are whispering, "I need this win to make up for yesterday." The consistently profitable trader operates from abundance. "I can afford this loss," he thinks. That difference, need versus afford, is the canyon separating the break-even trader from true consistency. The uncomfortable truth is this: the market is perfectly fine. It doesn't need your input, your anger, or your complex indicators. The market is waiting for you to change. You do not need to change the market. You only need to change the 3 feet of space between your chair and the screen. That small space contains your ego, your impatience, and your lack of definition. Surrender is the act of trading the market you actually see, not the market you desperately wish to see. This detachment, this mechanical execution of a known edge, is the key to unlocking the consistency you crave. But even when you achieve this state of mechanical execution, there is one final, destructive habit that most disciplined traders fall victim to, often hidden in plain sight, and it is the reason your winning trades never reach their full potential. That destructive habit is the relentless search for the massive, life-altering win. We chase the highlight reel, the single trade that erases months of mediocre performance. This craving for external validation, the big score, is the poison that keeps you from embracing the quiet virtue of consistency. The breakthrough is realizing that trading success is not about finding the perfect setup. It is a byproduct, a natural consequence of self-mastery. The market is not waiting for a new indicator or a better moving average crossover. The market is waiting for you to change. It is waiting for you to shift your focus entirely from the profit and loss statement to the perfection of your execution. Internal validation replaces external noise. Did you follow the plan perfectly? Yes or no? That is the only metric that matters now. Consistency is not just about showing up every day. It is the steady hand, the unwavering commitment to the process, regardless of the immediate result. When you stop trying to force the market to give you what you want, and instead simply execute what you know to be true, the edge finally reveals itself. This is the stage where trading becomes relentlessly boring, and that boredom is the sound of your ego finally falling silent. You are no longer trading for excitement or emotional fulfillment. You are trading for statistical inevitability. To achieve this, you must expand your journaling practice. Stop just logging the entry and the exit price. Start logging the internal landscape. What was your emotional state 5 minutes before the execution? Were you feeling fear, or was it quiet confidence? What was your state immediately after the trade closed, whether a winner or a loser? This emotional data is the highest value data set you possess. It is the real-time feedback loop of your subconscious mind fighting your rational plan. Because the single fear that guarantees you stay stuck is not the fear of failure. It is the fear of success. Success means the game changes forever. It means you have nowhere left to hide, no one left to blame, and you must maintain that discipline, that relentless, quiet consistency forever. It demands that you take full ownership of the results you generate. It is easier psychologically to stay slightly broken, slightly inconsistent, because that gives you an excuse to remain in the comfort of perpetual potential. Are you ready to stop fighting the reflection? The market is waiting for you to become the trader you already know how to be. The only thing standing between you and the next level is the courage to accept your current self, flaws and all, and commit to the process of becoming relentlessly boring. If you want to understand the true psychology of speculation, you must read the one book that defines the game. I am talking about Reminiscences of a Stock Operator. It is not historical. It is a permanent education in human nature and market cycles. The book is pure truth. Get your copy today. The link is in the description below.